Apple's stock at a 52-week low once again yesterday after the technology sector continues to get badly hurt by this sell-off. You're going to see the stock is up by about 1% this morning, but if you're watching tech in general, the Nasdaq is down nearly 35% for the year to date, and it's given up over 2 years of gains in what we've seen this year. Joining us right now is Gene Munster. He's Loup founder and managing partner. And Gene, when you start looking at Apple, I think that concerns a lot of people. It's so broadly held. Why do you think we've seen this sell-off recently? What's happening?
Becky, it's market jitters. It's as simple as that. It's this view that the March quarter, the guidance for the March quarter is going to be soft, and that unknown has pressured stock 15%. I think it's important to keep focus on the fundamentals here. The fundamentals are that they can't keep up with iPhone Pro demand. It's still 2 weeks out. That means demand is getting pushed to the March quarter. TSMC reported 47% growth for revenue for the October and the November quarters. That's highly correlated to iPhone growth. That suggests that they will exceed the estimates for the December quarter. So I would just put this as simple as market jitters. Those two facts, what Apple has said, what the lead times are, and separately what TSMC has reported, should cool investors' concern. That's not happening, which tells us that there's something bigger abrew with these investors. And I think it is those jitters about the March guidance. Unfortunately for Apple investors, they're going to have to wait until we get that guidance. And if I can just finish the thought, Becky, is I think Apple's going to be fine here. I think that their results for December are largely going to be in line. I think the guidance for March is actually going to be somewhat upbeat. And I think it's important for investors to take the December results in the context of the March results. You really need to add those two together because of some of the supply chain issues that they reported on November 6th. And I think when you combine those two, I think it's going to yield better than what investors are expecting. So jitters, but I think that the business is actually doing just fine.
Hey, Gene, I think when I look at Apple or any of these technology stocks, the question that comes is, was it fairly valued a year ago, 2 years ago? Was it overvalued at that point? How much of the gains that we've seen in these stocks were because the Fed had this very loose policy? And you could put this out for Tesla, you could put it out for any of these. When you look at just fundamentals and you try and, let's say, look at a new reality, which is going to be a Fed tightening situation, and by the way, central banks tightening around the globe, what is fair value for Apple or for any of these technology stocks? What do you think?
So I think in the case of Apple, it has been less penalized. It's down 30%. The broader FANG is down 48% for the year. But in terms of fair value, I think it comes down to ultimate what is growth. I still believe that fair value, Apple should trade at closer to a 30 plus multiple. And that may seem out of touch with reality, but if you consider that the current multiple is, call it 20 times next year's earnings, if you look at what the S&P is trading at, a similar type of multiple, and you look at what the growth potential for Apple is relative to the S&P, that's how we think about fair value, and I think that that should yield a closer to a 30 plus multiple.
Keep in mind, Coca-Cola, that's a big increase from where the stock is right now.
Absolutely, and I still come back to this comparison. It's a well-traveled comparison, but I think it's appropriate to remind myself is that Coca-Cola trades at a 28 times number. It grows in the low single digits. I still think that Apple is as important as Coca-Cola is. When you think about fair value relative to other tech companies, it's obviously a huge spectrum. And just to briefly touch on Tesla, is at this point it's trading at just under 30 times based on my numbers next year's earnings. Those may not be the right earnings numbers given what we are anticipating as a really tough year for overall automotive in 2023. So, what is fair value there? A little bit more hard to discern. But I think when it comes to Apple, I just think come back. We can't live without these products. That is a staple. Therefore, it should get a staples like multiple plus given the growth rate. And keep in mind, too, I'm going to stay on this drumbeat here, is it's not just about iPhones and Macs. I think that Apple's going to get into other product categories longer term, which should be good for revenue growth and ultimately the multiple.
Is Apple your favorite stock? We got to run, but is it?
I think so. For the long term, yes, absolutely. I think they're going to surprise people on what the outlook is for the March quarter.